Good morning and welcome to Money Control. I'm Mahalakshmi and we continue with our conversation series on how to ride this bull market. And I have with me a very special guest who has seen through the ups and downs over the past 30 years in our markets, Bharat Shah, Executive Director of ASK Investment Managers. Thank you, Bharat Bhai, for joining me this morning.
Thank you.
Such a pleasure to have you in the studio. So first off, portray the big picture for us, the way you see it. I know that you've always been bullish on India. And I don't think in the past 30 years we have seen a moment like this where a whole bunch of factors, local and global, seem to be coming together to make the perfect pitch for a fantastic bull run. How do you see it?
So I'll put it in two parts. One for India and second a bit of a comparison to the rest of the world. As far as India is concerned, I have absolutely no doubt that we are at a cusp of one of the biggest economic expansions ever. And it will be distinguished not only compared to the past, but I think that economic expansion will be distinguished compared to the rest of the world as well. But this is not confined to merely high rate of growth. What is more important is also a predictable growth, which is not a happenstance or a chance, but something that you can believe has structural elements why it will happen. That kind of a growth rate is a greater value because it reduces uncertainty, and therefore it is a greater value because the discount rates come down because of that less uncertainty. So I think the second very important part to my mind is the superior quality of the growth rate ahead. That's because of number of very strong initiatives and changes that have happened in the economic fabric of the country over the last many years. All of these have their own ecosystem which takes time to build up, and now enough of those changes have happened where economic tapestry now looks much more complete. The shape, contour and the strength are now far more visible. Of course, some more changes and more reforms are on the way over a period of time. But I think we can see the edifice on a strong foundation. Third, our lending industry is never at a better shape than what it is today. Asset quality, debt equity ratio of the lenders, the credit culture that has emerged after a lot of cleansing that has occurred. And the borrower balance sheets are also healthy and deleveraged. Plus the cost of capital has declined systemically through fiscal and current account deficit control. And therefore, all these ensures that the finance of the country are in good shape for these growth crescendo to happen. And finally, I think the capital efficiency of the system is rising. Return on capital employed, return on equity. And this has happened through the pandemic period itself. I don't have exact final numbers for return on equity of the corporate sector for 20 to 23, but I believe it will probably be highest in the world, if not close to where America is in terms of the return on equity. So that's a second factor, that the quality of the growth overall is much superior than in the past. The combination of superior growth rate along with a predictable superior quality of growth rate creates a base, in my opinion, for a long-term rising crescendo. Therefore, these economic expansion will reflect into the profits and cash flows of the businesses, their values, and eventually into their into the market values and the returns and the indices of the markets. So I think we are at an unprecedented stage. In my 35 years of observing investments in this country, I think truly we are at a special moment. And I'm not saying, when I'm saying over a period of time it is 2 years or 3 years or 5 years, I'm talking more like 10 and 15 and 20 years kind of a crescendo. So that's one. Globally, if you see, and if you take, say, 3 major economies, America, India and China, and trace their returns over last 10, 20 and 30 years, the two names which have been right at the top, whether you take last 1 decade, 2 decades or 3 decades, the two names they have remained consistent across the world markets have been India and America. So sometime in some period it is America number 1, but in other period it is India which is number 1. So that just shows that even over last 30 years, Indian markets have done decently well. If you if you trace that 30-year period and see China's economic expansion, unprecedented 13.5% compounded per annum, India at 8.5%, America at 3.8%.
Right.
But if you see the investment returns by the markets, America has been about 9.2%, India has been 8.3% in dollar terms, and China has been about 1.9%.
Yes.
Therefore, very high economic growth rate of China has barely converted 15% of that growth only has converted into economic
Stock market
returns for
returns.
the markets.
Right.
In India, it is 1 for 1. In America, for 1 unit of growth, it has been some 2.25 units of an outcome in terms of returns. That extra addition or reduction has been due to quality of the growth. In India's case, that quality premium has been not there. In America, it is significant. In China, it has been huge negative. My belief is China would struggle with a growth rate very clearly. 13.5 is a long forgotten history now for the future of China. It will struggle at a single digit number, in my opinion, for a length of time. America, clearly even that 3.8% going ahead probably is doubtful. India, without any doubt to my mind, the growth rate will be higher than what we have seen of that 8.5% nominal growth over a 30-year period. The quality part in America, again, there is a question mark whether that quality part of the premium would occur in the same way and how much it will diminish is the question. In China, that has been a bugbear for them, and therefore economic growth has not converted into returns. In India's case, I think the quality, the predictability, the solidity has distinctly reasons to get better, and therefore I think India will have rising growth rate as well as superior quality of growth, and therefore all reasons to believe India will do better in markets in next 10 and 20 years than what it has done in last 30 years. In America, clearly it will be lower. In case of China, growth rate is a definite dampener. Quality of growth, whether it will improve or not, time will tell. And therefore, I believe India has a real chance, real chance to be actually likely to emerge as number 1 market over the coming decades.
Sure.
That growth will not be free from volatility, which markets always will provide, but through that violence and volatility and upheavals, you will see a smooth rising curve.
Sure. Absolutely. So this is a very pertinent point you have raised, Bharat Bhai, that the capital efficiency of India Incorporated has improved. The fact that ROEs or the quality of earnings has improved, and that is what perhaps is one bit of why the stock market returns in India have bettered the overall economic growth rate, and perhaps we could say the reverse of that has happened in China. Now, my question is, in China, obviously what has happened over the last 2 decades, which has not happened in India, that we are now excited about, is this investment-led growth, right? Infrastructure, investments, the core sector, etc. And is that, do you see that as a big component of this quality of earnings? Because one thing that really distinguishes India in terms of quality of earnings is the basket of companies or the nature of earnings. So the larger is the consumer sector in your basket, your quality of earnings and ROEs tend to be higher. As we go more into the core sector or things that are linked to the economy, the quality of earnings might be lower. Do you see that becoming a worry at any point of time, or because we are right at the onset of this whole change, it's not the time to worry, it's the time to be bullish?
No, I think I see it as a greater opportunity rather than a concern. Infrastructure clearly, and the pace at which infrastructure is expanded, whether airports, ports, roads, railway, kind of overhauling which is going on. All of these have been unprecedented infrastructure expansion initiatives, and I think it will serve industry and manufacturing very well. PLI-led manufacturing support is another reason why Indian manufacturing is beginning to come of age. And whether we talk of mobile phones or electronics or specialty chemicals or pharmaceuticals or various other areas, or even electrical vehicle and the connected system. I think systematically these efforts will strengthen manufacturing not only for India but also for the global market. Related is the revolution happening and beginning to show in the logistics, which is a significant part of the economy as an expenditure, and plenty of reasons to believe it will come down meaningfully as a percentage in a rising economy. Therefore, those are savings for the businesses in some sense. Then the digital embrace. I think without any question, the society, the businesses, small or large, and government itself, the digital embrace of Indian economy is a very defining new feature that we have not seen in the similar enthusiasm, intensity and character earlier. Then the startup ecosystem, even though there have been some issues and some cyclical ups and downs which have occurred there, but net it is a system which will provide new entrepreneurship, new innovations, new business models. Then the way finance overall has been digitized, and UPI is a prime example of the global revolution that we have heralded. In many other homegrown initiatives like ONDC and account aggregator idea, or the Aadhaar-based affirmation of the identity digitally linking to the digital bank accounts. These are very, very strong foundational pillars,
right,
which allows economic growth rate to get accelerated. Along with these, I think what has very importantly happened is the speed and alacrity with which we are seizing the China plus and China alternative kind of situation. That opportunity is important, and I think we have shown remarkable agility to beginning to keep capturing important parts. Also, it is not about merely infrastructure and manufacturing, but even exports. I think there has been a renewed thrust and full focus sector by sector, and I think that will be an important catalyst for growth. Therefore, business expansion, new capital expenditure, consumption, infrastructure and exports all will emerge aided, abetted by manufacturing and industry, logistics, technology, digital prowess driving the growth rate. Finally, I would say a belief. Without belief, without confidence, neither businesses invest into the future, nor investors invest into the markets.
Right.
And I think one of the most remarkable changes that has happened in the character of economic activity and society, I would say, is the change in the optimism, confidence and self-belief. And especially with a huge challenge like COVID, the way we manage compared to the rest of the world, it affirms why we need to have that self-belief far more in place. And therefore, I think that final self-belief and confidence and optimism and capability to be guiding your own destiny is a very important, intangible, but a very powerful one. I think that makes for all the things, some of the very powerful things together to drive the growth ahead.
Sure.
Like a symbiotic, virtuous cycle.
Sure. Now, if you just look at the last 10 years again, it's the consumption pillar that did really remarkably well because, all the things that are right now were not right 10 years back. So looking into the future, would you bet on the investment theme or the consumption theme?
No, I think it is all of that. Investment-led, capex-led businesses, manufacturing, industry, infra will do well. Consumption itself will do very well because economic expansion in an aspirational society with still a modest per capita income but growing would result into greater part of that income converted into the consumption. And therefore, that will be the engine which will further drive. And India is large enough local market where manufacturing and creation of the economic activity can serve not only domestic interests but also international interests, and therefore exports I think logically we are focusing on to build that crescendo even on exports. Last year has been a bit of a dampener for reasons that we know of the war and supply chain disruptions and many other things, and the decline of the economies in the Western world, or if not decline, certainly stagnation. And therefore, these are tactical kind of challenges, but I think we are rightly focused there. And finally, I think we have demonstrated that we can be relied upon not only to absorb large dosages of capital, not just in businesses but also into the markets,
Right.
but we can give a gainful output and account of it, and which I think really speaking very, very few economies can demonstrate both large absorption of capital both in businesses and markets, as well as a productive outcome and output against that over a period of time. And therefore, that external capital will keep driving our ambition. And we have adroitly facilitated emergence of many new financial instruments to tap into this capital. Sure. And by making business conditions easier and facilitated, and therefore greater incentive. Anything which before it gets into motion takes more time. The law of physics, it requires adequate force before things move. I think the force has been applied for a length of time. Now I think the locomotive is beginning to move into the right motion. Sure. And then I think it will, with less friction, it will move ahead.
Sure. Now, shortening the time horizon a bit, if you just look at the next quarter or two, in fact, the rest of the year, last 1 year, you've seen the economy being very resilient. I mean, the best of analyst predictions, the real number really, the predictions fell short of the real number. Next 2 quarters, do you think it'll be the other way around? Do you see any reason for slowing down or moderation in growth?
No, I don't really find that. I mean, some businesses based on particular economic conditions and the global context and domestic context may have some attenuation or acceleration depending upon where it is positioned. But per se, whether an aggregate number is looking on a weaker footing, I don't see any reason why it is. Even the first quarter numbers so far We are just beginning to get into the full result season, so it is early to make a kind of pronunciation about it. But I see 23-24 as a good year from corporate business perspective. Top line will grow healthy, margins unless something really challenging occurs, margins have a reason to improve because last year was exceptional raw material and supply chain and logistics cost disruption that we witnessed. This condition should be favorable. Therefore, with the volume growth and decent top line growth, with our inflation rate, which I can't remember I have ever seen, but lower than the Western world, is a new phenomena we are discovering, that Indian inflation rate is actually lower than the Western world. And therefore, overall I see good conditions for volume growth, top line growth, margins to improve because of the cost will not rise in the same way. With the improving capital efficiency, relative charge on interest and depreciation also should be, for good businesses, relatively be curtailed. And therefore, I see healthy, very healthy double-digit profit growth for the overall corporate sector.
Sure. And one question on essentially in terms of market cycle, it means today the fact that we are at a record high means different things for different people. Anybody who's not made money over the last 1 year says, what's the big deal? Finally, I got the price that I, had last year. For somebody else who's a newbie, a new highs celebration, even including journalists, new highs celebration. For you, having seen so many boom bust cycles, and when you look at a combination of factors, the growth, near-term growth, the long-term trajectory, the predictability of it, and valuations, where do you think are we in that market cycle?
I mean, index to rise or stock prices of good businesses to rise is a normal phenomena. There is nothing exceptional. Ultimately, stock prices, as we all know, are slaves of long-term earning power. But that is only a partial statement. Also, you need superior quality of growth for the full outcome to occur. Because quality of growth, my apologies. Sorry. Quality of growth can aid to the returns. On top of that, earnings growth can reduce or can make it neutral. Therefore, quality of growth is often not counted, but a very vital part of long-term return generating process. And even investors often pay far too much kind of premium for the growth rather than the quality of growth. That is another reason why quality of growth is very vital. On a long term, sustaining distinguished growth rate is much more challenging. But a superior quality of growth rate is not necessarily challenged on a long term, unless there is something the context of the business or management is changed. What is a high quality business, whether it is growing at a higher rate or medium rate, still can maintain that high quality for a long period of time. Therefore, quality of growth is a much more reliable indicator for value creation and value prediction. Therefore, all put together, as I was mentioning earlier, the rate of growth will get distinguished compared to past. And what is more distinguished going ahead is the quality of growth rate. Index or the stock price is merely a milestone on the way. People get excited because the Homo sapiens by nature are much more short term, and they get overjoyed and over depressed with the immediacy of the events. But on a long term, I think we are on a foundational defining journey of a kind, which in my opinion will be unprecedented. So, we are at a cusp of that, and therefore, some number of index, whether 65, 66,000 becoming 75 or 80,000 or 100,000 or 125,000, I actually fail to understand what is that excitement all about. I mean, it's merely business as usual. Only thing is, in case of investing, these milestones come over a period of time, and therefore they acquire a special meaning to the observers. But given the context of long-term investing that any good investing is all about, these are merely milestones that you observe, but not really have any particular emotion about it, honestly.
Sure. So let me ask you the same question in a different way. You know, in the next 1 year, what do you think will surprise you? Because we often, we're told that, stock prices mimic earnings, which is true over a long period of time. But even over a 1 year period, it may not turn out. You know, stock market returns tend to be lumpy. So this year going forward, what will surprise you? I mean, market overshooting, say, a 30% return or going down more than, 30%. What would surprise you really?
1 year is too short to predict, and more than soothsaying and forecasting, I prefer to observe what happens and then adapt to it and try to gain out of it, rather than make many observations. Then you get carried away by it, and you tend to self-believe your own narrative. Therefore, even though I drew up the macro and larger picture, as an investor I remain micro. I focus on individual businesses, their character, the character of the management, character of the business, the size of opportunity, the earnings growth, the quality of growth, judgment of value, and the contextual margin of safety at which you want to buy, so that you aim to make, apart from the earnings growth and quality of growth annuities, you also want to draw on that margin of safety as a third set of return. Sure. That micro stock specific remains my model of investing, even though so far what I drew up along with you was a bit more of the larger picture.
Right.
So that larger picture remains in the background. The work on an ongoing basis remains micro. So 1 year is too short for me to make any meaningful forecast, but either of the numbers that you mentioned, a 30% rise or a 30% drop, those will be eye-popping, certainly, if either of these two things were to happen. I hope not, because undue rise also is not very healthy, and undue fall also unnecessarily creates confusion, unless there is something dramatic happening in the context of the world. Either of those 30% up or down numbers would be eye-popping to my mind. I do not see that, but you never predict markets. Markets can surprise you much more.
Which means that you are saying at a macro level or at the market level, we are pretty much in rational zone. So,
Yes.
it's a moderate increase that you should expect.
I would
not
say
a big correction, not a big breakout.
That's right. Markets have gone up, but it's not as if market valuations have gone into aberrant territory. And therefore, that's what I meant earlier also, that index rising is merely natural phenomena.
Yeah.
What may not be so natural will be when valuation is either disproportionately higher or lower than what the underlying economic growth fundamentals suggest. What I see today is more or less the economic fundamentals of the businesses and their valuations healthily aligned. They are not unduly cheap, but I don't regard them as deterrent valuations either. So it's in a reasonably rational zone. Individual cases, some stocks may be misaligned to that reality, but broadly I don't see any ruptures or aberrations in the character of the market behavior or the valuations. Sure. And therefore, we are in a decent wicket.
Sure. So, two questions. One is, what are you doing in markets now? Do you find yourself buying a lot more or selling a lot more or holding on to whatever stocks you have largely? That is one. And secondly, I know you follow this growth at reasonable price kind of a model. So where do you see pockets of value right now?
No, whether what we are doing in terms of buying, more buying would be function of new capital that we receive from the clients. So whatever new capital that we get would get deployed into the businesses. Generally speaking, we are always deployed. We don't maintain liquidity as an investment tool, and therefore there is no attempt to time the markets. There is no attempt to predict market index behavior. And therefore, there is rarely any meaningful level of liquidity. It will be just some decimal points of liquidity around. New opportunities are always a source of traction, but they have to be not only matching, but superior and materially superior than what you have already. Unless something is significantly superior than what you have, replacing it may not be a very good idea, because what you have dealt with, you have known that animal for a length of time, and you probably know a little better how it is going to behave, hopefully, while a new animal is always something to be worked upon. So that remains our mindset, but seeking new opportunities, replacing opportunities where most of the economic efficiency or benefits are already extracted in terms of the returns is a normal ongoing activity. So nothing distinguished situation there. On the second part, sorry, what was that?
Where do you see value?
No, I think lot of sectors would do well. As I mentioned, our focus always is on micro or business specific, stock specific. That's what drives us. That's what we remain focused on. Neither economic, macro, geopolitical, many other very interesting sounding sound bites that abound all over, including in media. We remain aware, but we pay no attention to it in terms of our investment decision making. But that said, I think plenty of activities will do well. Consumption across its various facets will do very well. And consumption is altering in India. It's no longer the kind of rudimentary staples is the only source of consumption. Discretionary, durables, luxury, many other facets of consumption are appearing. I think lending will do remarkably well. All conditions are right. Lender balance sheets are healthy.
So in terms of stocks, do you see value in those pockets?
In lending activity?
In consumption and then in lending?
Well, individual pockets, of course, there are values without any question. In every market, in every area, there is always some opportunity. We need to have an eye, we need to work hard, and we need to find them. And
anything you would narrow down without, of course, naming stocks? The luxury, for example, you said that's a theme that has emerged, especially post-COVID. Even in the Western world, Hermes, lots of luxury companies stocks have done very well. So there are some stocks that are here listed, similar models or similar segments being targeted. Is that space that excites you as a new space?
And luxury doesn't have to be defined as luxury in the context of Louis Vuitton type only. In every area, the consumption graph is getting more aspirational, more premium. And each area, you can find that. Whether you are a buyer of cars, or whether you are a buyer of liquor, or whether you are a buyer of consumer staples or durables, in each area, the aspirational quotient of the consumption is rising. So it's not some LVMH type of name only that defines luxury. Lending, I see tremendous opportunities because the entire stage is set. Lender balance sheets are healthy, quality of asset book is superb, conditions are ripe for more lending. India is under leveraged in general, Borrowers are with a healthy balance sheet, credit culture is strong, cost of capital is materially declined over compared to the past, and therefore, I believe lending as an activity will do multiple years of superb double digit kind of compounding. Similarly, insurance. Similarly, infra related capital goods, cement, which also supports infra. I think cement would have last 20 years cement witnessed 6-7% volume growth. In my opinion, all indicators probably will mean couple of percentage points more compounded volume growth in an industry which has become very robust and strong over last 20 years of consolidation and character improvement. Consumption I already talked about, specialty chemical, active pharmaceutical ingredient, pharmaceutical per se, healthcare related, agrochem specialty. Many of these businesses have multiple years of compounding opportunity, partly because they are seizing the opportunity that China is not in a position to now fully defend, and that confidence of the scale and size and performance is giving a lot of these businesses newfound confidence to invest into kind of business activity that they had never done in the past, so discover and do more. So multiple areas of opportunity. Sure. I don't think will be short. And one thing we less appreciate about Indian markets and economy, but it is hard to find any market or economy as variegated and as diverse as India is. A panoply of services and many services and world-beating services, emergent new manufacturing and industry activity, energy, infra, logistics, many other businesses, and the consumption, lending, international China substitution businesses, seizing of the global opportunity through exports. Many activities are acquiring more dimensions of capability and growth. Sure. And therefore, it will not just be horizontal growth rate. I think the verticality of the growth rate, because of the character improvement and solidity, will be extra dimension.
Sure. So I have lots of questions on everything that you have said. So first, let's take lending. For example, what pockets of lending do you feel excited about? I know that from the past, you had great admiration for Bajaj Finance. Despite high valuations, they, the stock did exceptionally well for all the period that you have held also, because they were able to show that growth and the market was never disappointed. Now you're looking at a whole bunch of headwinds, the fact that they are bigger in size, any regulatory compulsion to become a bank which will drag down ROEs, or the most recent thing, which is Jio Finance coming and disrupting that whole NBFC space. How do you first of all see this playing out at all? Will this entry of a strong player always causes some damage to the ecosystem? Do you see that as a big worry, or how do you play it?
Well, I can't really talk much about any particular name, especially on a public medium like this, but so the most important pillars that we see with Bajaj Finance and its significant evolution over a period of time, those pillars are superior ability to extract growth from the opportunity around. Even more importantly, very high quality growth, not just growth rate per se. And the return on asset and return on equity for them remain distinguished by a material difference compared to all other players today that we can see. Also, very wise and intelligent investments into technology all along, not today, to build that strength and capability so that lending becomes a bit more of a science and not merely so much more of an art. And finally, Management which represents a phenomenal combination of integrity and agility is something, those remain distinguished ideas based on which we have been invested into Bajaj Finance all along. Think now for 13 years really.
Right.
We see on all of those critical pillars, we continue to like what we see about that name. That is what I'll say. As far as the overall opportunity is concerned, I already talked about that the size of opportunity for lending is large. Lending sector is healthy, borrowing segment is healthy. India is under leveraged as a country. India is expanding, therefore that will need more capital. Plus India is putting new businesses and new business models to work.
Right.
That will also need capital. And therefore, opportunity to grow is massive. And I would think a good, strong new player will actually strengthen the firmament of the industry, not weaken it. I genuinely believe that new good player with a strong balance sheet and net worth will actually strengthen the ecosystem.
Sure. So another question on, specialty chemicals, which again you've been very bullish on for a very long time. Last 1 year doesn't seem to have been too good because there are a whole bunch of issues with respect to, China reopening, destocking, or all of these temporary issues. And today it looks like, there are, it's not the sector, or the investor interest in that sector doesn't look very enticing. Do you see that as a temporary correction phase, or how long could this suffering
As much as I
continue?
understand it, I think it is a relatively short one and short-lived phenomena likely to be. We must also not forget that many of the specialty chemicals are not merely domestic selling businesses. They sell a pretty large percentage of their
Right.
output to the international markets. International markets, Europe and America are going through two kind of contrasting situation. On one end, they are outsourcing from India strategically and even otherwise from an economic sense is getting higher and will keep getting higher logically, because other than China, there is no other country at a scale and quality and diversity of chemistry capability that India has. And therefore, on one end, for strategic and economic reasons both, outsourcing by Europe and China, Europe and America from India as a percentage would increase, relatively speaking. So that supports Indian chemical businesses on a long-term path. On the other end, those economies are undergoing a stress of their own and dislocations of their own. Some of the dislocations are actually favorable, like Europe is facing energy related dislocation.
Right.
Some of it is prompting them to actually outsource more from India. Some of it is resulting in a bit of a disruption in their business. So again, it's a mixed effect. Plus, the other element has been actually China's weakened growth rate. 21, 22, they went through the COVID related challenges, and emerging out of that, it is not as if their growth rates have really caught up. In fact, they seem to be wobbling.
Right.
And therefore, there has been a pressure on them to put out their excess output into the markets, and therefore some of the prices have come down, competitively speaking, sharply. I hope it is not materially long-term phenomena, because that will not make sense for them either, really. And I think Indian competitive capabilities have gone up. But there is a near-term pressure without any question, and that pressure I think would reflect into the results for some of the businesses, not necessarily all of them,
Sure.
but some of the businesses depending upon the kind of chemical, kind of situation, each one has a specific context, there can be challenges. But in as much as I understand and as I know, to my mind it is more near term rather than persistent long term.
Sure. One last question on these new age tech companies. Are you convinced about the kind of moats that they enjoy today? What is the quality of moat in your view?
The moats are exactly the same for any business, whether you have large size of opportunity, whether you have a scale, whether you can build a profitable business, whether you can build a predictable business, and whether you can build a durable business. Ultimately, these are the levers of value creation.
Right.
A large size of opportunity and management capability will give you a potential right to keep growing at a meaningful pace in a compounding way, not merely episodic way. When the character of the business is right and the way you manage it is efficient, then the quality of the growth rate also will emerge as superior. Quality also gives durability and resilience, because quality allows you to not wither away with the external challenges easily. Quality also gives you longevity and durability, which again is a very important bearing on the value creation, because durability improves the value of a business today. Also, quality gives a predictability. Predictability also improves the value, other things being equal, because predictability, relatively high predictability reduces the perceived risk, and therefore the applied discount rate to judge the value, and therefore it improves the value of business. I think till we see right combination of all of these, where there is a meaningful opportunity, that there is a scale built and at a profitable level with a superior capital efficiency and durable predictable quality, and managements which inspire confidence that they are not merely out there to grab an opportunity which may look hot from the people's perspective,
Right.
but really have a mindset to build businesses over long run. Many of those businesses still have to demonstrate their management solidity, even management durability, because many of them they are there today, they are not there tomorrow. You are not very sure how much longevity you ascribe to them. Many of them don't have meaningful skin in the game, and therefore you are not particularly sure as to how, unless you have meaningful skin in the game, your decision making may suffer from callous disregard for value creation norms, or at least
Right.
there are reasons to believe that that can be a potential threat area. And while some of them may build scale, but they are yet not profitable, they try to define profits, some of them in a very creative way, some
Lots of
adjustments done, and in some futuristic time frame. So we'll have to see whether there is a real problem, because profits are profits. There are no definitions of multiple definitions of profits. Simple definition of a profit in an effective way is the real cash flow. If you are generating a real cash flow period after period, then you know that you are doing a healthy way. Virtually none of them today demonstrates that, and therefore they need to prove that. And also, it is not for me to automatically believe about them. They have to demonstrate that they have it in them to deserve the trust and confidence of investors. Why should I automatically believe that they have it in them and they will create a magic?
Right.
It is for me, it is for them to demonstrate that they are building a business opportunity which is sound, that they are building it in a right way, and the character of business is right, and that it will create a strong engine of value creation over a period of time. Therefore, I remain observant. I want to remain engaged with judging that opportunity, evaluating and improving my understanding. But I don't want to feel compelled or in a rush to simply commit to them till they deserve that confidence in capital.
And that would mean that they start to show profits without any adjustments. That will be the,
That they
starting point for
demonstrate
you
a
to see.
business model which itself is clear. Many of them are not able to adequately define business model. That itself is a worry, because even without understanding business model, how do you get any predictability as to where it is? Their ability to run that business model is another question, but
Right.
first of all, business model itself is something in many cases is not clear. Some of them may have reasonable business model, but whether at a scale it is built and at a scale it is profitably built, again are open questions. So, there are all of these issues that need to be settled. And I would say it is not one of them or a few of them need to be satisfied. Every single one of them needs to be satisfied.
Sure.
You need credible management, you need a good business model, you need a scale, you need a profitability which results in cash flows, you need predictability, you need durability. And all of that thereafter, the valuation today of those businesses still need to make sense. And I would say they need to, onus is on many of these businesses when you access public markets to prove, rather than automatically have trust and confidence of the
Sure.
investors. And I think there is a material difference in the mindset between the two. Private markets are far more generous when times are good, or what they believe to be good times, and really accountability for that capital in terms of core tenets of value creation. Private capital tends to be somewhat more unduly generous in my opinion. And the definition of what is value creation itself is a highly debatable notion. When they come to the public market, then they are exposed to all of those questions, and legitimately so.
Right.
Not that public markets are free from their own idiosyncrasies and behavior and misbehavior at times, but public markets over a period of time are highly clinically sanitized place. And they reflect the reality quite admirably over a period of time.
Sure.
And those norms are tough. Those are not very short term, very generous benevolence of private capital kind of norms.
Sure. Just one last question. Articulate, why are you bullish on India?
I think
like
that's
three,
what
four most important things that make you really bullish on India.
growth crescendo of a rising number of a kind that we have not witnessed already on a very large base. We are already the 5th largest economy in nominal terms in the world. In purchasing power parity terms, we are actually the 3rd largest economy in the world. So, therefore, we are one of the biggest economies and which is going to grow at a meaningful rate. Second, with a superior quality of the growth, that gives predictability and longevity to growth. Third, that in turn results into compounding kind of a growth. Same growth, but occurs in a briefer, shorter period, and it occurs over a longer period. The compounding is not fully appreciated, even though it is talked about so easily. That compounding over a longer term is a huge power, where what may look like a reasonable thing, but done repeatedly, relentlessly over a long run, can produce an outcome which is disproportionate to what that individual period, more kind of ordinary looking kind of a occurrence in each period. And finally, I think we underestimate the power of belief, power of confidence. Without optimism, businesses are not built. Without optimism, investments are not built. You need skepticism in order to ensure that what are you optimistic about. But you can't per se be only pessimistic and hope to create value.
Right.
So you need right skepticism in order to preclude what you don't want to feel optimistic about. But you need to have basic confidence about future, about opportunity, about the likely framework which will govern all of that, and have confidence in that, and you feel that where enough conditions exist that you can run through normal challenges of the business and yet come up trumps.
Sure.
I think today as a society, as an economy, as business ecosystem, we have that belief, perhaps probably much more than compared to most of the parts of the world, that our destiny is in a greater control of ourselves.
Sure.
And that confidence of our destiny under our control is a very vital idea to catalyze investments and effectively outcomes.
Sure. On that note, thank you so much, Bharatbhai. As
you.
always, absolute pleasure talking to you.
Thank you. Thank you, Mahalakshmi. Always a pleasure talking to you.
Thank you.
Thank you.